Hi guys, Derek here. As you know, I'm always trying to bring you guys cutting edge tax strategies to help you reduce or eliminate capital gains taxes when you sell your building. You know I'm a big fan of Delaware statutory trust exchanges into professionally managed commercial property. But if you don't want to exchange into more property and you'd rather just sell and eliminate your capital gains taxes, my other favorite solution is an LLC with charitable intent, a strategy that could potentially reduce your capital gains tax bite to just 1%. So I work with a very experienced tax planner, Bruce Jones at Tax Wealth, who has over 50 years of tax planning and financial experience. His firm, Tax Wealth, provides tax analysis and tax saving strategies for business and property sellers. And he has saved them millions of dollars in capital gains taxes. Now, here's how he and I work together for my sellers to eliminate taxes when it's time to sell. The first thing I need to do is evaluate the price of your property so Bruce can prepare something called a pre-sale tax analysis where he crunches the numbers, shows you what your capital gains taxes would be, and how he saves you from paying up to 99% of capital gains taxes when you sell. So I need to evaluate your property. What I need you to do is send me your rents. That way I can figure out what your property's worth, and we use that number as the basis to prepare the pre-sale tax analysis. So once I get your current rents and your loan balance, if you have any, I'll need to gather a few more key details. That's going to be the depreciation you've taken over the years, the original purchase price, and the purchase date of your property. Now, once I have all that information, I'm going to go on the Tax Wealth website and input all that data into the intake form, which is going to send it over to Bruce so he can prepare the pre-sale tax analysis. Let me show you what a pre-sale tax analysis looks like. Okay, so this was prepared for one of my clients, and he has a rental property. He purchased it for $64,500 on September 25th, 1987, owned it for about 37.7 years. Estimated sale price would be Estimated sale price would be about $1,250,000. He has no loan on the property, so after commissions and closing costs, he'll be netting approximately $1,175,000. He did about $15,000 in capital improvements, and he's depreciated $45,150 approximately over the time that he's owned it. Okay, so let's see what his net results would be without strategic planning. So if he sells it for $1,250,000, he would owe about $386,000 in total taxes. That's Fed, state, Obamacare tax, and depreciation recapture. So he would be paying, effective tax rate would be almost 31% of the sales price. He would end up with $788,000 after the sale of the property and after he paid his taxes. So by using the LLC with charitable intent to eliminate 99% of the taxes, he would be eliminating $385,000 in taxes. Cost of sale, setup fees, everything is about $150,000. So he would be ending up with $1,100,000. He'd only have to pay $646 towards taxes. His effective tax rate reduction would be about 99.8%, which means he is gaining an extra $311,000. That's his net increase. That's how much extra he put in his pocket by using this LLC with charitable intent. So it's pretty powerful. So once that pre-sale tax analysis is prepared, we'll schedule a Zoom call or conference call on the phone with Bruce so he can explain how the strategy works and answer any questions you might have. And of course, everybody has lots of questions on how this works. So if you're interested in moving forward or learning more after the Zoom meeting or a conference call with Bruce, Bruce is going to send you the full due diligence package, including legal references and tax codes that support this structure. He encourages you to review everything with your CPA or legal advisor. If you don't have a CPA, which a lot of people don't, I can connect you with a really good trusted tax attorney who specializes in this type of planning to review the information with you and help determine if this LLC is a good fit for your situation. Okay, so let's say you've talked to your CPA or you've talked to one of our tax attorneys, independent tax attorneys that we refer you to. They will put together a custom, specialized Charitable Intent LLC. This process takes about 2 to 3 weeks. Now, what Bruce recommends is that you open escrow first, because then you'll have an accurate selling price to determine what the actual numbers are. So I may say, okay, this property I think is worth $1.6 million, and it ends up selling for $1.7 million or $1.5 million. So he wants to have an actual sales price to actually figure out what the numbers look like. So you don't have to start this in motion before you're in escrow. You can go ahead, we can put the property on the market. You can decide whether or not you want to go forward with this, or maybe you want to do an exchange, or maybe you just want to pay your tax, which I don't know why you'd want to do that, but that's your option. So, oh, by the way, your CPA or the tax attorney that we set you up with, they will be speaking with Bruce directly, because Bruce is going to go over all the minutia, the details and stuff with your advisor. So they're on board. They know how it works. They know the tax code. They know how it's structured, and they know that it makes sense. So now there are more details about this and how you access and use the sales proceeds after the close of escrow, when your money is in the Charitable LLC. Now, Bruce will explain more of that at our meeting, and of course, he's going to discuss it with the CPA or tax attorney that you decide to have represent you. So, it's a great opportunity for somebody who's tired of tenants and rent control and all that stuff and wants to sell but doesn't want to pay capital gains taxes. Let me ask you another thing. What do you think billionaires do or multimillionaires do when they sell a highly appreciated asset like company stock, a multi-million-dollar business, or a large rental property portfolio? Do you think they just hand over millions in capital gains taxes to the IRS without a second thought? Of course not. They surround themselves with elite tax attorneys, CPAs, and financial strategists whose job is to help them minimize, defer, or even eliminate those taxes. Take Mark Zuckerberg, for example. When he sold millions of dollars in Facebook stock, he didn't just do it randomly. He used a carefully planned tax strategy, just like other billionaires and ultra wealthy individuals do. So let's look at what Grok Artificial Intelligence had to say about it when I researched Mark Zuckerberg's Facebook stock sale. I think it was in 2024, a couple $1 billion. So let me share my screen here. Okay. According to Grok, Mark Zuckerberg's recent sale of Meta stock, about $2 billion in 24, aligns with the Rule 10b5-1 trading plan, a common tax and financial strategy used by corporate insiders. So these big guys, these rich guys, these billionaires, they use tax strategies as well. It's not the same as what I'm talking about now with this charitable LLC, but it is a tax strategy with similar components according to people I've spoken with. So he sold 5.6 million Class A shares, 1.7 million Class B shares. Here's a breakdown of the strategy and its tax implications based on available information. Zuckerberg's sales are executed under a pre-arranged trading plan, which allows insiders to sell shares at set times or prices to avoid accusations of insider trading, provides a structured, predictable way to liquidate stock. And then here's the grabber, the paragraph. Diversification and philanthropy, charitable. A significant portion of Zuckerberg's stock sales historically supports the Chan Zuckerberg Initiative, a philanthropic organization. So, for example, in 2021, about 89% of his 4.6 billion in stock sales went to the Chan Zuckerberg Initiative, which funds scientific research, education, and other initiatives. Donating appreciated stock to a charitable entity like CZI allows Zuckerberg to avoid capital gains taxes on those shares while potentially claiming charitable deductions, reducing his overall tax liability. That's what I'm talking about, folks. There's a charitable component to setting up, in his case, a foundation, in your case, an LLC with charitable intent. The charitable philanthropic angle is what allows you to eliminate, avoid, defer capital gains taxes. Now, while I'm here, I just wanted to mention one thing before we move forward, and that's a disclaimer. I'm not a CPA, tax advisor, or attorney. The information provided here is for general information purposes only and does not constitute legal or tax advice. You should consult with your own CPA, tax professional, or legal advisor before making any decisions based on this strategy. Tax laws are complex and subject to change, and your individual situation may vary. So, I'm offering you something, Bruce is offering you something that's comparable to what billionaires and trillionaires use when they sell capital assets. They're not paying 40% capital gains taxes when they sell their stock or their building or whatever. Now, here's the best part. Bruce offers a complimentary, no obligation, pre-sale tax analysis for your building, for your situation, even if you're not sure you want to sell yet. That way you'll know how much tax-free cash you'll walk away with if you decide to sell in the future or now. It's a no-brainer. It costs you nothing, and the insight you gain would be priceless. Now, I know that many of you are thinking about retiring from the stress of tenants, leaky toilets, rent control, and endless city inspections, but you hesitate because of the capital gains problem. I get it. So let's fix that. Call me today and I'll have Bruce send over a free complimentary, no obligation pre-sale tax analysis, and he'll crunch the numbers so you can see in black and white what your tax obligations would be, and by using this strategy, how much extra cash you'd put in your pocket if you decided to sell. So call me and let's get your personalized pre-sale tax analysis started. Guys, this is a tremendous tool. It allows you to get away from property management and all the BS that we have to go through owning apartment rentals, especially if you're a little older and you want to retire and you just want less stress in your life. I'm here to help. Bruce is here to help. Call me. Let's get started. It's free. There's no obligation. And I'm just here to help you guys when it's time to sell. Thanks for watching, everybody. Derek Ruiz, eXp Realty. We'll talk to you soon.